All right, the real estate professional status. That's near and dear to my heart, being in real estate, the real estate professional status.
Yes.
Is it-
So it's a hard classification to earn, but if you can earn it, it's a great strategy to take advantage of. Starting with the basics, rental income is almost always considered passive in its character. And what that means is that you can't net losses from passive activities with W-2 wages that you have from your 9 to 5 job. And so what you'll see online is buy real estate, depreciate or do a cost segregation, depreciate a lot in 1 year, and use those losses to offset your W-2 income and pay less taxes overall. But what really needs to happen there you need to recharacterize that income from passive to active in order to net those together, net your losses with your income. And that takes a lot to get there. And it's a highly contested area by the IRS. But what it really takes is you've got to spend more time working in the real estate profession than you do in your 9 to 5. And that is typically the highest hurdle to jump through. It really is only able to be done if you are a real estate professional in your 9 to 5, if there is some overlap between the two. But if you're working 40 hours being a computer software engineer, it's going to be really hard to work 41 hours as a real estate professional. And that's just on average there. So on top of that, you've got to work more than 750 hours managing the properties. And so that's typically an easier hurdle to climb and one that clients are typically able to surpass. But then you get right into that first threshold of having to spend more time than you do in any other profession managing those rental properties. So once you're able to do that, you have to materially participate in the management of the properties, make sure that you're spending as much time as you're reporting and tracking your hours when it comes to management of the properties. So it's not just a buy, have a management company manage everything for you, and then just accept the rental income or rental losses through that way and all the tax benefits that come with it. It's got to be material participation in the eyes of the IRS, and that takes some significant documentation. It takes tracking your hours, tracking responsibilities. And I would recommend, typically the most successful scenario that we see is with one high earning spouse and then another stay-at-home spouse who might be interested in getting their real estate license or managing the properties there. That lowers that first threshold of having to spend more time than your typical full-time profession. That makes that an easier hurdle to jump. And so we see a lot of successful couples take on this approach together and be able to document and fully substantiate that professional status. It is possible. It's very hard to attain. But if you've got a really good CPA, if you've got a tax planner working with you, they should be able to let you know whether or not it's black and white of whether you qualify or not. And if you do, you're fully able to offset those rental losses against your W-2 income. And that can be a major tax strategy to implement that can minimize your overall liability by a significant amount.
Yeah, I think that's one of the big keys to it is that only one spouse has to qualify, right? Like you said, if one of the spouses stays home, the other one is a doctor making $500,000 a year, it's definitely possible to make that happen. But what you talk about, the threshold, this is where I see all the time in this is you have to work more than your other profession. And you see all the time people like, oh yeah, I definitely spend more time with my rental properties. That may even be true, but I'm telling you right now that IRS is not going to believe that you work 81 hours every single week of the year. It may not be lying, but they're not going to believe you because it's just, for most people, it's unrealistic, right? So you're right. That number one, by far the biggest threshold. And me being in the real estate world, this topic comes up more than anything else, the real estate professional thing, because all the time you hear the tax benefit of real estate and depreciation, cost seg, blah, blah, blah. You can save money on taxes. Even if your rental is not profitable, it's going to save you money on taxes. But what they leave out is if you're making over $100,000, that starts to go away. And if you make over $150,000, it's gone completely, right? So you're getting no benefit on the tax side. Now, those roll over year to year. It's not like you lose them completely, those losses. And when you sell the property, if you haven't used them, it can offset the gain. It's not like it goes away completely, but it's not this tax gold mine that people make it out to be. And the exception to that is a real estate professional status. But as you said, it's incredibly difficult to qualify for. You need to make sure you're working with your tax professional. You should have some type of spreadsheet or something where you're literally tracking the hours that you're putting into it. So when the IRS has questions, you can say, here it is. Here's my hours. Here's what I spent it on. You can't say I was up till midnight last night stressing whether this tenant was going to pay rent tomorrow. So there's 4 hours. Like that's it's very specific on what qualifies and what doesn't. Again, another great tool in the toolbox. But
exactly. And here at CPA on Fire, we want to make sure that if that is available to you, you're absolutely taking advantage of it. So that's an assessment that we'll make through a set of questions, just an initial client fit assessment. We'll let you know right away if that's something you can be taking advantage of. No need to worry about it yourself. We'll let you know if we think that's a good fit for you. If that's an opportunity available to you, that's definitely a tax strategy to implement. But just like you said, there is a, high threshold of documentation that's required there to support that position. So we want to make sure you're covered there.
And I think with all of this stuff, one of the most important things that your tax professional can do for you is keep you from doing things you shouldn't be doing just because social media told you that it was possible, right? So yes, maybe they're costing you some tax savings that people are telling you about, but what they're actually saving you is all these compliance issues you're going to face in the future and paying all those tax savings back plus penalties and interest. So we say no a lot, right? Part of this job is saying no. You don't qualify for this.
Yeah, exactly. I think you do have to say no to a lot of questions like that. It's great that clients are asking it, that they're aware of it and wondering if they're a good fit or if the opportunity is available to them. So you do have to say no every now and then, or just say you don't qualify for it right now. But I think communicating that you're assessing that on your own without them even having to bring that topic up, that's also key in the relationship that we try to, that we aim for here at CPA on Fire. So rest assured, we're assessing that for you. That's one of the hundreds of opportunities that we're addressing, seeing if each client has that opportunity available to them. So communicating that you're letting the client know that if it's there, we're going to take it. If not, I'll be honest with you, and I'm not going to put you in any sort of position where you can't sleep easy at night or you've got a big change in tax due from previous returns. That's not worth the hassle or the stress or the overall return on investment at all when we stretch thin the possibilities of tax planning and tax opportunities there.
All right. Maybe I want to conclude on one thing, and that's, I think last time we talked with Andrew, is like what I call the silent killers, right? Meaning that if you pay too much in taxes, like if you don't take advantage of certain things, like the IRS isn't auditing your tax return and returning that money. So what we see is like people will come to us and they didn't take advantage of a situation for the last 5 years, right? Maybe we can do some things on an amended return, but like that money's lost. And that's like super important. And I think so many people are focused on, oh, can I take advantage of this situation in Augusta? But man, there's so many things that don't get covered in social media that can be taken advantage of, particularly with certain entrepreneurs. So like what I call is a silent killer. So yeah, you have all the highlighted techniques or abilities to take advantage of certain deductions, but man, it's the silent killer, I think, that really gets the entrepreneur. So something like when you do have that tax professional that's understands your particular situation, that's really
exactly. And we put a lot of scrutiny on these social media campaigns of different tax strategies there, but bringing them to light and letting business owners know that it's available and asking those questions to their CPA, it can't hurt. So I encourage all owners to make that assessment for yourself, ask your CPA if it's an opportunity that's truly available to you, and you may find a great opportunity that was missed initially. And so have those conversations. I encourage it. And then based on what your advisor, your CPA tells you, just make sure you're adhering to the compliance standards there. So you're right. The IRS is never going to come back and tell you, hey, you could have taken advantage of X, Y, and Z. Here's your money back. We wish your CPA would have told you that. But the moment that you are taking advantage of something that you're not qualified for, they're going to be on top of it right there. It is not a double-edged sword in that sense. And that's why it's so important to have a good relationship and a trustworthy CPA that you can be working with, that you know that they're assessing all of those opportunities for you. Because at the end of the day, there's a certain amount that you're required to pay to stay in compliance. And we want to make sure you're right around that level in an area that's a high return on investment for the amount of stress and time and effort that goes into capitalizing on those opportunities. So that's the goal here at CPA on Fire.
Yeah, I think Ron, what you said is absolutely true. Like it's just like in sports, right? You see all these highlights and these great teams making all these highlight plays on SportsCenter or whatever. But what really makes these players or these teams great is the little things they're doing for the 99% of the game, not the highlight plays, right? And I think it's the same thing with taxes. Yes, we want to hit the highlights. We want to make sure you can take advantage of Augusta rule or real estate professional or whatever applies to you. But it's more important that we're doing every single thing throughout the year and you're getting the basics and the fundamentals right. So
exactly. The best CPAs are the ones that you can not have to be constantly assessing or micromanaging, that can just be in the rear view, making sure you're taken care of from a compliance standpoint, and then letting you know when something is going to impact you, having those quarterly consistent meetings throughout the year and letting you know there's no surprises coming around the corner. There's no large tax bills coming in April, and that we're minimizing it in multiple ways that are available to you. Yeah, like you said, the 99%, the unflashy component of it is really the backbone of this industry. And that's built on trust and transparency with your CPA. So
Awesome.
Awesome. Let's wrap this one up. And Ron, I think we need to have Andrew on more. I think I like this flow we have going with him.
I was just say at least help our audience put themselves in a better position. It's all about making sure as an entrepreneur, right? You're utilizing the team around you, surrounding yourself with a good team to put you in the best position, because we know our clients work hard enough. So let's try to keep as much money in their pocket as possible. So anyway, thanks, Andrew, for being our guest. Josh, always a pleasure. We'll catch up until next time. So thanks a lot, everybody, and we'll see you soon.
Awesome. See you next time.